Hi, Shawn Haynes, the Ag Center. Give you a quick update on commodity prices here in California. Dairy prices stopped their fall this week, moved up about a quarter to about 15.06 average for the next 6 months. 14.27 being the lowest expectation for November, and 15.28 being the high out in March. A lot of that coming on the heels of the fact that cream volumes have been kind of eaten up by the market. On the butter side, butter seasonality buying is high. We're still at a discount to the EU, and that butter's moving. Cheese, on the other hand, stayed stagnant as cheese volumes coming in and going out are about even. Domestic consumption of that cheese has kind of picked up and offset the fact that the EU that we don't have exports, given the fact that EU is discounted to us now. And I think we'll have to see where a lot of that plays out, but we're kind of hitting a peak period in production, usually seasonally, coming in October and then falling off for the rest of the year with weather and everything else like that. If that's the case, and we see the seasonal buying adjustment, might have seen a floor and maybe a little increase after that. A lot to go before that happens. Production report came out 4% year-over-year increase versus September. Looks like the market priced that in and didn't really have a shock to the market as far as price goes. And so that's very hopeful on the dairy side. Beef markets still continue to stay high historically. Have come off about 30 to 40 cents after all the statements came out from the government importing beef from Argentina, and also looking at this Packer issue, and it's just creating uncertainty, but also creating a lot of spotlight from the consumer on the price of beef. So prices have been at about $4.50 to $5.10 per pound on 4.5 weight steers. We'll have another sale from Overland coming next week, which help reset those prices. As far as the calf ranch goes, calf prices at $13.50 for a drop. Holstein on beef cross calves, $700 on Holstein bull calves, and $900 on Angus Jersey crosses still. And then the cull cows have come off a little bit to about $1.58 per pound, given that a lot of cattle are getting sold in response to this lower milk price that's been out there. So it's kind of pushing the prices down. Again, the consumer, it's the only place on the beef side that I think they could really kill this whole thing, because the supply-demand is just not going to be in balance for at least 2 to 3 years. It's just too few cattle, and not many people put more on to service the current needs. So if the consumer backs off, that's the biggest risk we've got. Coming to the almond side, price is still staying consistent, $2.55 for California's, $2.60 for nonpareils. Stock-to-use ratio is about 18.3%, which is current use plus carry-in inventory. A lot of issues getting this crop off the ground because of weather, and also the fact that buyers are sitting on very little inventory, buying hand to mouth, holding that price up. If this final crop comes in, which should be December, kind of a good estimate, at the 2.7 or lower, you may see another bump up in price there. So it's a good year for the almond industry. Wine side, wine grape industry still in a glut. Suffering through way too many grapes versus the amount of demand out there. Consumers just left that market. New buyers just aren't buying wine. And so very pulled out about 38,000 acres in the past year. Some people think we need to pull another 200 to 250,000 acres out to kind of get to a supply-demand balance. And until that happens, you're going to continue to see price decreases in that market. And I know first quarter next year, you're going to see a number of wineries and or wine growers face bankruptcy because of it. And that's what I've got this week for commodities. Thanks.